Joining me now in a Fox Business exclusive for First Reaction is Federal Reserve Bank of Atlanta President Raphael Bostic. President Bostic, I'm sure you were watching it along with the rest of us this morning, starting at around 11:23, I think it was, that word hit the tape that a senior administration official said President Trump's likely going to fire Jay Powell. What went through your mind at that point?
Well, first of all, it's really good to be on the show, Liz. I'm always happy to be back with you.
Thank you.
You know, we get lots of announcements, lots of things about the Fed all the time. And, you know, I really try not to spend a lot of time focusing my energy on that. You know, we've got a very complex situation in terms of the economy. And I really just want to make sure that I'm laser focused on trying to understand where it's trying to go so we can devote our policy discussion on the things that actually matter. And that's really what I spend my time doing.
Have you spoken to Jay Powell today?
I have not spoken to the chair. I don't try not to call him most times unless there's something really important. We have our regular series on that, and that's really how I try to keep it.
You know, when we saw this come to pass and the president was, we called it floating a trial balloon of sorts. The markets didn't like the first bit of news that he might be fired. The markets dove, and we can cycle through all of the intradays here and people can actually see for themselves. But the point that the president was making was he couldn't believe that the Federal Reserve Chair hasn't cut rates. Now, Mr. Powell has said, we need to wait and see. We fought really long and hard to bring inflation down from 4-decade highs back in June of 2022. We don't want to make a mistake and cut rates too early, and suddenly all of these tariffs come through and we start to see inflation pick up once again. You had said about 3 months ago that you had yet to, that was March, I guess, that you had yet to see inflation pass through from the tariffs. What do you see today?
Well, today, I think we may be in an inflection point. You know, over the last several months, the inflation data has come in really in a very nice way, very close to target, in fact. But this most recent CPI print really is sending a different message about what the potential trajectory of inflation can be. We see that the headline number has moved away from our target, not toward it. We see that on a month-to-month basis, so if you just look at May to June, we saw the highest increase in prices that we've seen all year. And then if you look at the basket, almost half of all the products in the CPI basket, if you weight it by expenditure, are now showing price increases of 5% or more. In January, that share was about a quarter. So we are seeing things underlying in the economy that suggest that inflation pressures are up, and that's really a source of concern. It's something that we're really going to have to watch moving forward.
You know, we've got it up on the screen. You saw inflation in toys, furniture, apparel. Cars and used cars fell, but we are starting to see that, you know, when you see import-heavy types of product, like toys and apparel, that is starting to move higher. So what is your base case? Would you absolutely stay away if you were a voting member, which you are not this year? Would you stay away if you were a voting member from cutting rates at the moment?
Well, right now, I would wait. And I would just tell you, we spend a lot of time trying to ask businesses and find out what's likely to happen. And what businesses have told us is that this isn't your usual textbook tariff situation where it's announced, the tariffs move in one day, and then you kind of know where things are. This is a situation that's quite fluid. And so different businesses are using different strategies in terms of how they're thinking about moving their prices as their cost basis adjusts. In recent weeks, I've actually come to the view that it may be several months more, maybe even into 2026 before we'll see the full effects. But I really want to make sure that I understand what the full trend is likely to be. One other thing I would just say, in our surveys and in our conversations with business leaders across the Southeast, they all tell us the price pressures are real. And there's going to be a point where that stuff is going to show up in terms of prices and margins. And we'll just have to see how much goes to the final consumer price versus how much gets taken up in the margins of these businesses. Right now, I'm not hearing a consensus on what the answer of that's going to be.
Are you saying then that if it takes that long before we start to see costs coming through on pricing, that it could be next year before we see a rate cut?
I'm not saying that at all. So what I'm saying is that everything is on the table. And I really want the data to guide us. If it's the case that we see the prices start to evolve in a consistent and gradual, steady way away from our target, then that is going to lead us to have to think about a particular policy approach. If we see, on the other hand, that the negotiations that are going on right now lead to a tariff level that puts an arrest to that and halts that such that we don't see those pressures continue, then that's going to be a different policy prescription from our perspective. Today, I don't know which of those pathways we're going to follow. So I'm watching the news like you. I watch your show to try to get insights on things like that so that I know moving forward what I think the most appropriate policy action for us will be.
President Bostic, I do want to play a soundbite from President Trump earlier when he talked about where he thinks rates should be. Of course, he is a real estate guy, so we know he wants them lower. But listen, and then I'd get your reaction.
We should be paying 3 points lower, and we would save $1 trillion a year in interest if that were the case. And all it is the stroke of a pen. And that goes for his board, too, because his board is not doing the job, because they should try and rein this guy in.
Even if President Trump were to fire Jay Powell or replace him, can he force the board to cut rates?
Well, it's a committee. And, you know, you've been on committees, I'm sure, and you know that there's robust discussion about what a pathway to move forward is. One thing I really appreciate about our committee is we do have a diversity of views. And every time I go into a meeting, I listen hard to what folks are seeing and hearing and why they are falling out where they are. I would say I go into every meeting not locked into a particular course of action. I really do want the data and the arguments and the viewpoints of my colleagues to govern how we move forward and how I think we should move forward. I will say today, our mandates are the ones that we've had all along. Stable prices, that's inflation, and maximum employment. Today, our inflation is not at our target, and that has been true for quite some time. And for me, it says we have to really make sure that we do all that we can to preserve our credibility. We told people we were going to do all